Assalamualaikum warahmatullahi wabarakatuh. My name is Zulfa binti Zikifli, metric number 2019204722. Okay, before we go deeper in our discussion, first we get to know what Islamic money market. Generally, there are two main structures of function in Islamic securities. There is money market and capital market. So first, what is capital market and what is money market? Capital market is a financial market that are for longer term fund, while money market is a short-term borrowing and lending, where the tenure of money market instrument is from overnight to 12 months. In the money market, banks lend to and borrow from each other using short-term financial instruments such as negotiable Islamic certificate of deposit, government investment issue, or other instruments such as Islamic assetable bills and Islamic treasury bills. Generally, the Islamic market provides short-term to medium-term liquidity in the global financial system. The Islamic money market performs a vital function within the economy by providing an efficient means for economic unit to adjust their liquidity position. Okay, next, let's see the characteristics of Islamic money market. First, the transaction volume, which involve huge sum of money. For example, in Islamic treasury bills amounted to Rm 1.7 billion in April 2005, while bank negotiable notes had an outstanding amount of 6.5 billion ringgit Malaysia. The second character is the low risk of default in Islamic money market. The government tends to provide a safer structural framework for the Islamic money market with proper guidelines, law and procedure to perform transaction between various parties. In order to promote the transparency in the market, the government issued guideline for sell and buyback agreement (SBBA) in August 2002 and guideline for Islamic negotiable instrument to ensure the fair transaction and reduce the risk of default. And the third, the instrument to be transacted in the Islamic money market have a maturity of less than a year. Therefore, Islamic money market securities are usually more widely traded than longer-term security because of their liquidity. These securities are transacted in line with Islamic teaching by the use of Islamic principles such as Al-Inah principle in government investment issue. Other examples of instrument securities of the money market are Islamic treasury bill, Islamic assetable bills, and bank negotiable notes. And the last, let's see for the function. Okay, the Islamic money market is essential to the functioning of Islamic banking system. The first function is liquidity management. Money market serve as an avenue for financial institutions to source daily funding or short-term investment. It also allows financial institutions to maintain optimum liquidity, which is in turn allow them to meet customer demand. Non-financial institutions also use the money market to manage fluctuation in their working capital with the short-term financing or placement. Okay, the next is serve as a second avenue. Money market serve for secondary trading of money market instrument. Depends on the view of rate of return, the participant will decide by themselves either to buy or sell money market instrument in anticipation of obtaining investment return. The instrument available in the money market provide investor with different level of risk, return and maturity. Okay, the last, money market are used as a channel for the central bank to conduct their monetary policies. Due to the connection between money market, capital market and banking system, hence money market can be represented as an ideal platform for bank to conduct monetary operation. Next, let's see the development of Islamic money market in Malaysia. Starting in 1994, Malaysia Interbank Money Market was established, where it is subsequent to the issue of the guidelines by BNM in 1993. And in 1996, Malaysia Interbank Money Market offered his first product, which is Mudarabah Interbank Investment, where it to solve asset liability mismatches. And in 1999, Al-Inah was introduced, where Bank Negara Malaysia, BNM, serve as a fund provider. Also, in the same year, Mudarabah money market was introduced. And starting in 2000, more and more products based on Bay Al-Inah were introduced, such as bank negotiable note in 2000, government investment issue in 2001, Wadiah accepted instrument in 2002, and Islamic treasury bill in 2004.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabila binti Taji'i, and I'm going to present my part, which is about the difference of Islamic market and conventional. Alright, so we go to the next slide. Okay, to begin with, Islamic market differs from conventional market in the function and operating modes are based on the principle of Islamic Sharia. Okay, so the banking activity that complies with the Sharia law, which derive actually from two main sources, which is Holy Quran and Sunnah. So, meanwhile, conventional banking has the function and operation modes are entirely based on man-made principles. Okay. Next, we can see the next point, which is Islamic banks promote risk sharing between provider of capital, or we can call it as investor, and the user of funds or entrepreneur. So it means we can be more prepared and aware of the risk that could be happen in the share that will be shouldered together. Okay, but conventional bank states that the investor or lenders are guaranteed a predetermined interest rate or return. So it's like conventional bank, they already confirm lah or guarantee already lah to their investor. Alright, so we go to the third point. Okay, so Islamic market is also aims at maximizing profit, the same with conventional as well, but still adhering to Sharia guidelines. Meanwhile, conventional market is maximize the unlimited profit. So like they couldn't care less about the sources of the profit as long as they get profit. Alright, so we go to the next slide. For the fourth point, we can see that the difference of Islamic market and conventional. Firstly, we can see that Islamic market, as in Islamic bank, it has no provisions for charging defaulters any more money except for compensation, which is usually like that the proceeds are donated. But conventional can charge additional money or penalty and compounded interest in case of defaulters. Okay. Alright, so let's see the point number 5. Islamic market also differs in the aspect of when organization experience a loss. It is shared among the investor and entrepreneur. Different with conventional, because if the organization at a loss, interest is still charged, so there is no sense of sharing the loss. It's like just one side of them experience the loss. Okay, so lastly, Islamic market involve participation in partnership business, which is the fundamental functions of the Islamic bank. So understanding the venture is therefore essential. But the essential role of conventional is to lend money and receive it back at compounding interest.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabila binti Syabuddin, metric number 2019-230402. Okay, I will present about the differences between the capital market and the money market. So, what is the meaning of capital market and what is the meaning of money market? Okay, let's start with the definition. Okay, the money market is the link between lenders and borrower that want to raise fund on a short-term basis. In very simple term, the money market is a market where you trade short-term securities. Anything that is less than 12 months within a period of 12 months or 365 days is described as short-term security. Alright, now with the capital market. Capital market is where you raise fund on a long-term basis, so that where a lot of government corporate institutions go to raise money for a period longer than 12 months. So it's medium term or a long term, right? So you find securities like bond, you find securities like stock equity, you find multiple type of bond, saving bond, and all of those type of securities considered as long-term security. So in the capital market, What also interesting is that the capital market have the primary market and the secondary market. So the primary market is also a place of first issue one, right? When where the institution is looking to raise money goes to issue the first time. And the secondary market is where it can be traded on a secondary basis. For instance, I might decide to buy that bond. Let's say the bond is for a period of 5 years, but I want to sell off before that 10-year expire. So I might go to the secondary market to sell it off if I find a buyer. Alright, next, what is the types of security? So security that I find in each of this market, in the money market, you find treasury bill like 90 days, 882 days, 364 days treasury bills, and then you find your short-term commercial paper, or if it's a 12 months commercial paper, you find your fixed deposit. So this is the examples of security that are short-term you will find trading in the money market. So in the capital market, you find equity, you find bonds, long-term bond, corporate bonds, government bonds, all types of bond like FGM saving bond. So you find that because it's longer than 12 months. So if you want to buy shares in the company, equity and shares meaning the same thing. So if you want to buy shares in a company, you go to the capital market to buy shares. So you'll find more long-term securities in the capital market, and those are the types of securities you find in the capital market. So the important point in the differences between capital market and the money market is the risk associated with each market. The money market is considered safe, to a large extent very safe, because you're working with established institutions like government or corporate institutions that have existed for a long period of time. And there is usually due diligence carried out before you can. Even as a corporate decision, risk fund in the money market with the equity market is a lot riskier. Your capital is a lot riskier in the capital market, especially in the stock market, where you can buy shares in the company today, and then by tomorrow the company crashes. There is a recession, the value of your share drops, or that business goes out, so it's a lot of riskier in the capital market. So there is a lot more risk in the capital market than there is a lot risk in the money market. Alright, the final point is expected return. So what return should you expect from investing in the money market versus investing in the capital market? Now, the money market is safe, you know how it works. Low risk, low return. So you will definitely earn lower return in the money market than you will earn in the capital market. The capital market is a lot riskier, right? So if you have the risk appetite to invest actively in the capital market, you will earn higher return than you will earn in the money market. So remember, when you invest in the money market, what you really have is financial interest depending on the security. You're just going to invest in something and get your money back with return with the capital market. So that basically how it works in different market, the money market versus the capital market. So both are required for a betterment of economy, as they fulfill the long-term and the short-term capital needs of the business and industry. The market encourages individuals to invest money to gain good return.
Assalamualaikum warahmatullahi wabarakatuh. My name is Asia binti Said Bunaha. I would like to share about who participate in Islamic money market. Okay, first is Central Bank, which is Bank Negara Malaysia, BNM. Okay, Bank Negara introduced the Islamic money market in 1983 in two-phase approach. The first phase was to develop a large number of Islamic financial institutions providing Islamic financing facilities and the introduction of an Islamic interbank money market. In the second phase, the bank wanted to create a large number of financial instruments offering Islamic products with the introduction of Islamic banking service, which is IBS. Okay, number 2 is commercial bank. Okay, commercial bank is selling negotiable Islamic certificate of deposit and ICD. They also utilize short-term financing and use the surplus to create more fund by placing this into the respected Islamic financial instrument such as Islamic Interbank Check Clearing System IICCS and Mudarabah Interbank Investment MII. Okay, next is who is participate in Islamic money market is business, which is provide funds for deficits unit and also provide return for surplus unit. Okay, we agree that the Islamic money market is able to increase liquidity of the commercial bank through short-term securities. These securities provide liquidity to deficit bank and to government. Okay, 4 is investment company. Okay, the Islamic money market offer a method to raise cash. Okay, investment company is to make a market for money market securities by maintaining an inventory from which to buy or sell. Okay, this firm are important to liquidity of the money market because they ensure that both seller and buyer can readily market their securities. Okay, the other hand, okay, finance companies such as My Bank Finance, Finance can raise fund in the money market primarily by selling commercial paper. Okay, they then lend the fund to consumer for the purchase of durable goods such as car, boat or for home renovation. Okay, last but not least, pension funds, which is employer provident fund, EPF. Okay, the government body is responsible for investing a portion of its account in the money market via financial instrument. This contribution suggests a steady growth of EPF over the year because they hold a huge amount of cash in hand due to regular contribution from employers. Okay, that's all from me. Thank you.
Assalamualaikum. My name is Nurul Najwa binti Dahlan and I will present about definition of Islamic money market instruments. Islamic money market instrument is Islamic contracts used in the sale and purchase of securities in the primary and secondary interbank money market. There are many Islamic money market instruments such as Mudarabah Interbank Investment (MII). That is refers to a mechanism whereby a deficit Islamic banking institution, investing bank, can obtain investment from a surplus Islamic banking institution, investor bank, based on Mudarabah profit sharing. The period of investment is from overnight to 12 months, while the rate of return is based on the rate of gross profit before distribution for investment of 1 year of the invested bank. The profit sharing ratio is negotiable among both parties. The investor bank at the time of negotiation would not know what the return would be, as the actual return will be crystallized towards the end of the investment period. The principal invested should be repaid at the end of the period, together with a share of the profit arising from the use of the fund by the invested bank. Next is Wadiah acceptance. Financial certificate which represents the transaction between Islamic bank and the central bank. It refers to a mechanism whereby the Islamic banking institution place their surplus fund with BNM based on the concept of al-Wadiah. Under this concept, the acceptor of funds is viewed as the custodian for the funds, and there is no obligation on the part of the custodian to pay any return on the account. However, if there is any dividend paid by the custodian, is perceived as hibah gift. The Wadiah acceptance facilitates BNM's liquidity management operation, as it gives flexibility for BNM to declare dividend without having to invest the funds received. Under the liquidity management operation, BNM used the Wadiah acceptance to absorb excess liquidity from the IMM by accepting overnight money or fixed tenor Wadiah. Other than that, Islamic acceptor bills. An order given by a bank customer to pay on its behalf a sum of money at a future date. The objective of introducing IAB is to encourage and promote both domestic and foreign trade by providing Malaysian traders with an attractive Islamic financing product. The IAB is formulated on the Islamic principles of Al-Murabaha, defer lump sum sale or cost plus and buy at dime, debit trading. Al-Murabaha refers to the selling of merchandise at a price based on cost plus profit margin agreed to by both parties. Buy at dimes refers to the sale of a debit arising from a trade transaction in the form of a deferred payment sale. There are two types of financing under the IAB facility, namely imports and local purchase, and secondly exports and local sales. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Wanur Azmina binti Wan Faisal and I will go with the next instrument. The next instrument is Arahnu Agreement I. So under Arahnu Agreement I, the leader will provide a loan to the borrower based on the concept of Qad al-Hasan. The borrower will pledge its securities as collateral for the loan granted. However, if the event where the borrower fails to repay the loan on maturity dates, the leader has the right to sell the pledged securities and use the proceeds from the sale of the securities to settle the loan. If there is surplus money, the leader will return the balance to the borrower. So BNM will use Arahnu Agreement I as a liquidity management tool for its money market operation. Return from the Arahnu will be in the form of gift hibah and is determined based on the average interbank money market rates. So the next instrument is Islamic Negotiable Instrument INI. The INI cover two instruments such as Islamic Negotiable Instrument of Deposit INID and Negotiable Islamic Debt Certificate NIDC. So for the Islamic Negotiable Instrument of Deposit, the application concept is Al-Mudarabah. So it's referred to a sum of money deposit with the Islamic banking institutions and repayable to bearer on the specified future date at the nominal value of INID plus declared dividend. So for the negotiable Islamic debt certificate, the transaction involves the sale of banking institutions as asset to the customer at an agreed price on cash basis. Subsequently, the assets is purchased back from the customer at principal value plus profit and to be settled at an agreed future date. So the last instrument is Government Instrument Issue GII. When the first Islamic bank in Malaysia began operation in 1983, the bank cannot purchase or trade in Malaysian government securities MGS, Malaysian Treasury Bills MTB, or other interest-bearing instruments. However, there was a serious need for the Islamic bank to hold such liquid paper to meet the statutory liquidity requirement as well as to park its idle fund. To satisfy both requirements, the Malaysian Parliament passed the Government's Investment Act in 1983 to enable the governments of Malaysia to issue non-interest bearing certificate known as Government Investment Certificate GIC, now replaced with Government Investment Issue GII. So the GII was introduced in July 1983 under the concept of Qad al-Hasan, but the concept of Qad al-Hasan does not satisfy the GII as tradable instrument in the secondary market. To address this shortfall, BNM opened a window to facilitate the players to sell and purchase the paper with the central bank. So the price sold or purchased by the players is determined by BNM, which maintains a system to record any movement in GII.
Okay, so the conclusion is, in this context of the research, instilling an Islamic market-oriented culture is very important. Why? Because firms will be better equipped to comprehend the unique needs of their Muslim clients. Okay, so that is why Islamic market is widely accepted. And firms will also be able to increase market sensing and processing of information within the business through a market orientation that focus on Islamic culture, resulting in a better responsiveness to consumers' demands and wishes. Okay, so that's all from us. Thank you. Assalamualaikum.